The world's largest cryptocurrency, Bitcoin, was founded in 2009 during the Great Financial Crisis. It took some time to gain popularity, but together with other cryptocurrencies, it has already evolved into a massive market worth around $1 trillion. However, as the whole crypto market dips from all-time highs reached in November 2021, and the Federal Reserve raises interest rates to combat rampant inflation, many investors are anxious about how Bitcoin and other crypto assets would fare if the economy enters a recession. Let's find out how a recession affects the crypto market and if a recession is the best time to invest in crypto and stocks. Welcome to Crypto Inquiry, where we are dedicated to providing you, the investor, and the crypto curious with factual information and topics. Our goal is to keep you informed to make educated and timely decisions and remove the fog of hidden information. Nothing is meant as financial advice, and always do your own research before investing. Here we are building a community to help each other stay informed and make the most of our financial gains. How does a recession affect the crypto market? According to the experts, here's what crypto investors should expect. Crypto is no haven. Many investors are looking for assets that might protect them from a recession or a stagflationary environment as they contemplate the probability of a recession or stagflationary climate. However, according to experts, crypto is not the place to seek for it. Given its volatility, says Scott Sheridan, CEO of online brokerage Tastyworks, I'm not convinced Bitcoin can be termed a safe haven. Popular cryptocurrencies like Bitcoin and Ethereum have fallen almost 70% from all-time highs as investors shunned risk investments after interest rates climbed. Sheridan believes that cryptocurrency values will remain down until volatility, as assessed by the VIX, rebounds to far more normal levels. Until then, he feels that the combination of potential alpha in equity markets and the emerging situation and associated instability in cryptocurrencies are more suited to speculating than offering storm shelter. Outperformance for both stocks and cryptocurrency investors will be tough to accomplish until recent volatility levels subside. No way to value cryptocurrencies. One of the most popular objectives directed at cryptocurrencies as investments are that they have no inherent value since they produce nothing for their owners. Your return is entirely dependent on selling it to someone else for a higher price. As a result, prominent investors like Warren Buffett and Charlie Munger have questioned the investment potential of Bitcoin and other cryptocurrencies. Munger stated in an interview that cryptocurrency is an investment in nothing. He doesn't want to buy a piece of nothing, even if they declare they can't make any more. Even Bitcoin and crypto asset advocates concede that assessing the value of a digital currency is difficult, if not impossible. There is no established technique for evaluating Bitcoin, according to Noel Atchison, head of market research at crypto lender Genesis Global Trading. It's narrative-driven and stories may change on a dime. Nonetheless, Atchison remains enthusiastic about Bitcoin's long-term prospects. She sees more uses for it and sees it as an investment in emerging technology. Crypto could get worse before it gets better. With crypto assets already falling sharply, traders may be wondering if the worst is over. Analysts, on the other hand, see potential risks on the horizon. Bitcoin's price, according to Atchison, is unconnected to economic realities, but its attitude is. Because the market is underestimating how active the Fed will be, risk sentiment will worsen dramatically. Recent months have tested investors' faith in cryptocurrencies as an investment. Terra USD, a $1 peg stablecoin, has plunged to a few cents, while cryptocurrency lender Celsius Network has filed bankruptcy. A British Virgin Islands court ordered the closure of Three Arrows Capital, a cryptocurrency hedge fund, in June. According to Tammy DaCosta, an analyst at a financial market site, institutional investors and large cryptocurrency exchanges are under pressure, and some are on the edge of disaster. The failures of Terra, Celsius, Three Arrows Capital, and several other major enterprises, including Coinbase, recently have made maintaining an upward trend much more difficult. Is crypto helpful? We have no idea when or how the next recession will come. But we do know that there are more options for planning now than there were earlier. The tried and true ways for weathering a recession include cash and high-yield stocks with strong balance sheets. This method is still viable, but so is investing in Bitcoin. Here are some of the reasons why Bitcoin, the world's best asset over the last decade, is also one of the best recession-fighting methods. It was built for it. Bitcoin's mystery developers sought to create a currency that individuals could trust and that could function without the assistance of a third party in response to the widespread breakdown of the existing financial system. They succeeded in establishing a non-fungible value store unattached to any sovereign government. It is inherently diversified. The US dollar is the same in both China and France. However, it is still the United States official currency, which meant it has all of the benefits and disadvantages of the American economy. Furthermore, it may be difficult to obtain, hold, and use in a capacity other than cash in many countries. Bitcoin is naturally diversified since it's not impacted by the ups and downs of a single economy. Rather, it represents boundless riches. Recessions, as we saw in 2008, have the potential to ricochet across nations with similar economic interests. Despite economic downturns in the United States, the European Union, Japan, and many other developed countries in 2008, many developing countries expanded from 2007 to 2009. Aside from macro trends, the price of Bitcoin may change owing to legislation, environmental concerns, government mining restrictions, fluctuation in institutional acceptability, or any number of other factors. However, these features occur on a case-by-case basis, ensuring that Bitcoin's value is not sensitive to a single occurrence. Its efforts to govern crypto-related financial goods, the Securities and Exchange Commission, for example, is cracking down on cryptocurrency exchanges like Coinbase. This information directly affects the price of Coinbase shares. News like this can have an impact on Bitcoin's price, but only to a limited extent because Bitcoin's future is not determined by the regulatory rules of any one country, including the United States. It is a secure and globally transferable store of wealth. Bitcoin's value is dictated by its scarcity, security, and transferability. Bitcoin, like gold, has commodity characteristics in that its value remains constant regardless of how an economy operates. Its ascent, unlike that of a stock, is not the result of strong industry tailwinds, technological advances, innovation, financial discipline, or a superb management team. It is beneficial throughout both economic booms and downturns. While Ethereum has more practical applications and perhaps more upside than Bitcoin, Bitcoin is better suited to prosper during a recession. Its purpose is not to foster the development of smart contracts, non-fungible currencies, or other useful blockchain applications. Instead, Bitcoin functions as a form of wealth storage. Total supply is capped and added supply is decreasing. The fact that Bitcoin's algorithm has stood the test of time gives it a great deal of trust. Since its inception in 2008, the Bitcoin protocol has consistently regulated supply by ensuring that the pace of Bitcoin mining remains constant and that the quantity of supply added to each block mined decreases with time. The computational power indicates the level of demand for Bitcoin. It has grown organically. However, unlike the influence of new sawmills on the lumber market or drilling operations on oil and gas supply, the amount of computational power involved is minor and has little effect on supply. What will happen to crypto during this recession? With fears of a recession rife, cryptocurrencies are venturing into unknown territory. Simply said, the crypto market hasn't been around long enough for us to know how it would react in a major downturn. Bitcoin was the first cryptocurrency developed in 2009, and much has happened since then. However, there have been a few moments of bad economic activity in the recent 13 years that we can examine to get a sense of what cryptocurrency's future may hold if a full-fledged recession occurs. In 2015, one of the rare moments of economic uncertainty after 2009 happened. GDP expanded after 2014, but at slightly slower rates each quarter, and finally peaked at 0.1% in the fourth quarter of 2015. In 2015, the S&P 500 had its first negative year since the Great Recession. During this moment, the crypto asset class was completely destroyed. From the beginning of 2014 to the middle of 2015, the total market cap of all cryptocurrencies decreased by approximately 70%. In 2018, there was yet another phase of recent economic insecurity. Similar to 2015, the country's GDP increased, albeit by a lower percentage each quarter, finally falling to a 1.3% growth rate. The S&P 500 had its worst year since the Great Recession, losing 6% of its value. Crypto investors who have been following the market since 2018 are certainly aware of the problems that year brought. After peaking at above $750 billion, the cryptocurrency market valuation plummeted to as low as $107 billion, signifying a catastrophic 85% drop. Bitcoin dropped from almost $19,000 to slightly over $3,000. Opportunity awaits. It is plainly obvious that cryptocurrencies are not immune to sluggish economic development. In fact, they are frequently the hardest impacted. It is not uncommon for cryptocurrencies to drop 3/4 of their value when recession worries develop. But there is a silver lining in the middle of these dark times. Investing at the bottom of these periods in 2015 and 2018 would have resulted in massive profits. As long as there is fear of a recession, crypto will struggle to make major gains. Investors who are ready to take advantage of current cheap prices to decrease their cost basis might position themselves for gains comparable to those saw during the 2017 and 2021 bull runs. No one can predict when the economic mood will shift, so no one should attempt to forecast the market. But when macroeconomic conditions are favorable, we may anticipate cryptocurrencies to rebound in the same way that the economy has in the past. That's a wrap for this video. Let us know in the comments below if you think that cryptocurrency will fare better than fiat currency in a recession. If you enjoyed this video, give this a big thumbs up. And don't forget to subscribe to our channel if you want to see more videos like these. See you next time.